would just ask each of our panelists to introduce themselves, starting with Maria Teresa Zappia. Here's at the center, on the left-hand side, slightly. She's the Chief Investment Officer at BlueOrchard. Thank you, Maria Teresa. Then, Pierre CARPENTIer, Investment Director, Investisseurs et Partenaires, and he's also co-organizer of today's conference. Thank you, Pierre. Then, Barthout, next to Pierre, Barthout Slingelandt, Managing Partner, XSML Capital. Thank you, Barthout. Christophe, Poline, who is the Head of Sustainable Development, second on me right for Schneider Electric. And he's also a corporate investor. Thank you for being here, Christophe. And then Olivier De Guerre, no need to introduce him anymore, Chairman and CEO with Phitrust Partenaires. Thank you. Now, as a kick-off, during the last panel, we came up with a definition of what capital investment is. Perhaps you could all say a few words of introduction, explain what your fund is doing in terms of investment policy, and perhaps provide highly tangible examples and explain what impact investment means to you and how you actually measure it. We want it to be as concrete, as tangible as can be, and provide examples. Maria Teresa, perhaps you could start. Good afternoon. I'm the Chief Investment Officer for BlueOrchard. Let me say a couple of words about my company. Talking about impact investing, it's mainly, we're really on the front line. Our company was created back in 2001, or started in the film 2001, and we are specialized in private debt, microfinance mainly. So we were talking with Michel Severino originally about the track record of impact investing. Stemming from this, we have more than 15 years experience in microfinance and impact investing. Today, we have assets of 1 billion. That also includes advisory services. Our team is based in Nairobi, so deeply committed, let's say, in terms of our African portfolio. And we have $70 million portfolio in Africa in 10 different countries with about 20 financial brokers we're doing business with. By impact investing, we think that microfinance is not necessarily impactful enough. But I think, of course, we could further develop that. But more importantly, companies like BlueOrchard started really to develop funds that are topical. And recently, last year, we got 2 deals, one that is specific about African education with our financial partners still, another one that is more mainstream, let's say, about climate insurance. So here again, microfinance, I would say, is like a seed investor, if you will. Is the investor of impact investors. How can we appraise the impact? Well, I heard the other panelists talking about indicators. But like all companies, we came up with an impact matrix that is quite specific. It is a process that is really part of an investment process. Meanwhile, with the new funds that we've been managing, Regional Education Fund for Africa is one of them. And there are many topics and talks indeed on this topic. Is it possible to... I mean, we could have all the indicators in the world. We could start with 33 or 20 indicators, whatever, but we think that it already is difficult to actually change to actually communicate with our partners and speak a common language, So we have to be careful about regulations. We do not want institutions we partner with who are measuring the impact without doing the rest of their job. So talking about impact, we refer as BlueOrchard to the number of persons we were able to serve. Small entrepreneurs, about 30 million. 250 institutions or financial brokers as well in 60 countries. And that, to me, is the impact. 3 words, 3 figures, which are quite plain to understand. That speaks for itself. Thank you, Maria Teresa. Pierre CARPENTIER now. We've heard a presentation from Investisseurs et Partenaires. Perhaps you could get to the heart of the matter, giving you an example and see how you've assessed the impact of your investment. You have a long-standing experience in Africa. Thank you. Without going back to the detailed presentation, perhaps it could remind you of what ENP is about. That's the missing middle, really. SME that is looking for funds for startups, because we keep on investing on startups. And on average, today, with the EPIAE, we have less than €1 million investments. On that particular segment, we've seen things changing. The market has evolved for the past 15 years. So we still aim at working as impact investors, but we see the emergence of more mature companies that already have experience with self-financing. When they are willing to open up their capital to investors, that was not sort of given 10 to 5 years ago. And with their experience, with the positive feedbacks that we see about the way investors are behaving, well, it is a way to build up trust, if you will. And in terms of sector, there were changes as well. We have a big portfolio in the field of finance and microfinance. Rapidly, we've been investing in health, agro, and food and agricultural sector, and we have local companies with an impact on job creations, on the opportunities for well-trained people who find it hard to find a job on the job market, and therefore these are additional and local solutions to markets that were managed by foreign companies. So the market has changed, as I said, and there are about 60 investments in 15 countries where we are represented, and the impact of it all can be studied with a track record, with our track record. So we have a track record base that was fed for many years now, and we have some reports about the impact, but we increasingly work with companies in order to design action plans and help companies improve their practices with all stakeholders. First and foremost, the staff, of course, but all the stakeholders are involved, and the environment is to be considered specifically. So we want to design upstream these action plans, we support them, we roll them out, and monitor them. So it's always about upgrading them also. It's not only taking instant snapshots of indicators, but setting up objectives and considering the gaps in terms of forecasts and actuals, impact-wise. And for many years, we've been doing something quite successfully, which is have a complete review of a company, of all the impacts, considering the long-term perspective and having a 360-degree vision, impact-wise, of the company on the environment and stakeholders. Interestingly enough, it is of course useful to the company, but these are good practices that can be learned and afterwards rolled out elsewhere. We're learning ourselves, of course. These are things that sometimes tend to be too theoretical, and we're trying to set up tools, but nothing can replace practice to actually measure and optimize these impact elements.
Barthout, would you like to go on to talk about your investment policy? We work in DRC and in Central African Republic. We work with SMEs. We have a portfolio of 26 companies now, from education to transport, telecoms, etc., etc. So we've been here for the past 4 years with local teams in Kinshasa, in Central Africa. And our investment strategy is our shareholders and debt. We think it gives us the opportunity to work with companies. They need capitals. What we see on the market is that banks, for all the needs of companies, and I see various impact. I think in Africa there's various countries and various kinds of development, and what we see in DRC is that there's need for various products and services. And we want companies to be capable of giving access to services. And if a company works well, there's growth. It gives growth to the people who have been hired. We do know what needs to be done for it to be well equipped to get to growth. And the result is that the people who are hired and other measures of impact, impactful measures rather. You wrote a very interesting example, actually. Yes, we've already talked about Iris. We do that every single year. We can't do a bit more than once a year because it's a bit too much work for the companies and for us as well. So every year we take about 20 measures, 20 metrics. And one example, 2-3 years ago, we invested in a clinic in Kinshasa. Their revenue was $300,000 in those days. We've invested almost $800,000. They built a new clinic, which was opened in October. We're building an operating theatre and so on. And before we set up the new clinic, they were capable of growth of revenue of $1.5 million with profits which were a lot higher than they were in the past. If we say, okay, well, what's the impact? It's our investments. Lots more people have been hired. A clinic which can give a lot more people to things which aren't done in DRC right now. I mean, nowadays they can have an operation, so they don't have to go abroad for operations on various producers. This is a PME, which is quite big because we've got more than $1.5 million, so it's quite a big SME. Christophe, let's move on to corporate. You worked on Schneider Electrics and electrification. How is this investment policy quite specific for impact measurements in Africa? Christophe, Poline. So the investment funds created by Schneider Electric in 2009 was born under the double auspices of, first of all, the response CSR policy of a company who talked about one major program to favor access to the company to electricity. Sorry, it was a multi-sectorial approach. There was training, one part which was had to do with products and equipment, and also investment. So this investment fund was created to the end of promoting access to electricity. Another thing that helped contribute to this fund is the funds that receives the investments of Schneider Electric when it comes to solidary investments. There aren't many of us. We've only got, and we manage about 5 million euro. We invest in part in France, in solidarity, and in part in Africa. And we have small investments between 100 and 300,000 million euro, and we're always minority shareholders. When you talk about impact, when we started in 2010, we were, well, naive. It's easy to measure what we do. We're going to count how many people have access to electricity thanks to the companies we invest in. But as we invested, as we look into the subject, we saw that it's not the same to have access to electricity through a solar panel with a solar system that allows you to have a fridge, for example, a working fridge. And that a company that sells irrigation solar systems. And then we started counting. It's a lot more complicated to see how many people have access to electricity because they can grow fruit and veg. So we are currently, well, still looking for more bearings. We have an impact criteria, which is the amount of houses that have electricity. We're thinking about how we could integrate this notion of power to this impact. And the third thing we're thinking about is how we're going to integrate this idea of activity that generates income, which is possible for the companies we work in. So 3 metrics, so as to not create extra work for autonomous company. Another thing which we always bear in mind is to be as simple as possible and to give as little a burden as possible to the company we invest in, which is a small company, and we want them to focus on their development. Thank you very much. Olivier, to just finish this introduction, how is Phitrust investment policy, you're one of the initiators of this concept of impact investment, how is it quite specific? We started in 2005. We had a small foundation to fund social entrepreneurs. We worked on restructuring a small foundation, Trust Partners. It was companies whose mission was to answer a social environmental issue. We were very bottom-up with the projects that came. We've got projects in Africa. That's why we invested in Star Partners. We thought it would be better to go with professionals and branch out by ourselves in Paris. So we work with Investisseurs Partners. We helped invest in the funds of Schneider Electric, and we decided to work with partners. We've got some projects in which we invest in France, which are extremely active, be it for into the area of technology or microfinance in Africa, because they've developed strategies in Africa. We're small because today we invested 20 million euro in 30 smaller projects. We also have 7-8 projects in Africa. Now, when you talk about impact, we've developed our own methodology because we have found things were too complicated. We wouldn't dollarize things. We didn't want to put money on the impact. When someone finds a job, wherever it may be, you can say that it's less expensive of a state or who enough, but you can't put a figure on the smile of his children who are going to school for the first time. We didn't want to put a figure on the work we do with people. We have 14 managers from small and larger corporations, large and smaller corporations, middle-sized corporations. We want to know how much time they spend on these projects. We're going to try and put a figure on it. And they would not tell us how much time they spent on it. We are doing this pro bono. We don't want you to put a figure on this, so we don't put a figure on this. Another really interesting thing is that 4 years ago we were analyzing results, and in the middle of a committee meeting, they said, well, you've got financial data, but what are the impacts? So we have a process. When our investment committee gives us a portfolio, we analyze what's happening. And we don't have a choice, but we'd have to look at the impact. So this impact measurement isn't a reporting tool, it's a strategic tool to decide on investments. Even if we decide to put money back in, to lose money, because we think it's more interesting for the social impact. And we had investors who came, most either institutional or private investors, because they want their money to be useful and for it to bring an impact. And they say, if we don't manage to do things, there won't be more investors in this area. Thank you very much for this very interesting transition. So now let's move on to the issue of fundraising. So fundraising, how is fundraising for impact investment specific? What's the promise that you make to your LPs? So Maria Teresa, we'll start with you. It's a perfect transition, actually, because in a way, I think there's this theme, this idea of where you position yourself, where you decide where to position products and where you position yourself as an actor of impact investments. As for BlueOrchard, our experience is that we've always said there was a double bottom line. We've always looked at for profitability, either social profitability or financial profitability, or both. And we have also got involved in everything that has to do with communication, the social part and so on. Because the financial part, in the end of the day, where you've got a fact sheet, it's quite direct in a way. And, well, we decided to start getting involved with social performance reports. And nowadays, investors, I think it's really interesting. It depends on the market. Some markets have a clear focus on all these issues of social performance before financial performance, actually, and others where social performance is, well, something that's secondary. So it all depends on the culture of the investors, on the kinds of investors. We were talking about family offices, foundations. Now, these are very different investors from institutional investors. BlueOrchard, actually, had this capacity. We have always worked with institutional investors because of this, and it's completely different worlds. So it's very difficult to put them all in the same basket. And one thing we've done quite well actually at BlueOrchards, is we've structured funds where we have both public and private investors who work a mix. This is quite important because public investors, say for example, Proparcos and development banks like DFIs, they play a really important part as catalyzers for private investors. So they take more risk, they're subordinate to private investors, and they give the opportunities to investors who may not have quite as much experience in emerging markets and impact investing. It doesn't give them the opportunity to go back to a new asset class. So it's allowed us to increase fundraising, generally speaking, for impact investments and investing, and to attract investors who weren't necessarily, that good on the subject. Barthout, when you talk to limited partners in your fundraising, what is the arbitration you have between impact and financial return? if you see this arbitration, as we said earlier on, I think that for us, there's a specific situation in DRC. We can't have too much arbitration because it's a country that has an economic basis, and we want to help companies work with companies for them to be able to survive the first few years. So we really focus on their management of business, governance, financial parties, everything basically. And that doesn't mean that you can't invest in a school sometimes. We've invested in schools 3 times, in healthcare 5 times, more or less. In schools, education, well, it's more difficult to focus fully on profits, so we make an arbitration. As for health, you can, depends what area you're in. When you're in a hospital, worldwide it's more difficult. But when you do something a bit more specific, you can have this combination of returns and impact. Pierre, same question. In Investors and Partners, how does fundraising work? How is it specific? Well, fundraising changes over time. Investors and Partners started with private fundraising. We had to show the way, and a few adventurers had the first round table meeting with Patrice Otno. And we had this idea of a missing middle that wasn't served by the actors in investment. Well, quite quickly, we were able to raise funds from institutional investors. That was their vocation. Classic donors and Proparco worked with us very earlier on to make all this possible. And in the last fundraising sessions, we've opened around our promise that we had earlier. We talked about earlier on. We managed to attract private investors who looked at Africa with interest. They had questions on Africa as well, and they found that we were one way of putting a foot in this African continent, getting to know Africa better, to have joint operations of investments. We've had quite a few nice successes in that area, and also to work on this evolution of African entrepreneurships. Maybe you've got another example which is quite interesting over the past few years, 15 years. Outside of fundraising, well, one thing I think is a nice illustration of this, but maybe it's because I like it, is what we've done in agri and agro industry. It's not an easy sector to work in, so we have missing middle, minority partners in Africa, and then we take the most complicated sector, that is investing in the agricultural sector. We've got quite a few operations in this, actually. And one thing is interesting. To go back to Madagascar, at least 2 of them, a company in the south of Madagascar in a very complex area. We've managed to identify some speculative opportunities that allow us to produce special oils for industry. It's completely exported. They're called filial. We export all our production towards Europe with customers who want specific products, who want to go back to more natural oils, whereas they'd always been working with artificial synthetic oil. So when we look at this project, when we invest in this project, we've worked for many long years with entrepreneurs. Now we need entrepreneurs who completely are on board with this. But I mean, entrepreneurs don't come and look for an impact investor and then they find out they've got an impact investor. When you share a vision of how you do business, this is the case of Sophie et Léol. We say, okay, we're working on creating local added values and maximizing profit. But It's not our job. It's not the job of a company to structure this area, but that's not the idea. We decided instead to have a very inclusive industry and to have about 3,000 families included to this nowadays. 3,000 families, they help with the... We work with them, actually, with a few subsidies, actually. We managed to have this mix of a private approach and donors who can help with some points. They don't subsidize the companies, but they subsidize us upstream in introduction level. So we have some lovely experiences here in teaching, health, agriculture. Christopher, you have an experience to tell us about electricity, don't you? Yes, well, I don't have much else, actually. So one of the nice experiences we've had today is with a company that works in Uganda that sells individual solar systems. It's a company that covers several areas. The first point, and the reason for which we invest in this company, is that there's real technology. In this, we'll find a real electronic intelligence on subjects which are very complex, which is the loading and unloading of batteries. The second thing that has to do with this company is that they were intelligent. They decided to create a partnership with a mobile operator. So we've got this convergence between energy and mobile phones. They become more concrete in partnerships between companies of these two sectors. So there's this mobile telecom company that does marketing, advertising, which is something that energy startups can't afford to do yet. They make their sales network available to them. It's one of the rare networks that really touches upon rural customers. And on top of that, the energy company will allow the customer of the mobile phone operator to charge their mobile phone, which is a real issue. And through the payment of these machines, they get some SMS traffics, and that facilitates the development of mobile money by tooling all these mobile money agents. So you see convergencies and agreements in areas which seem to be quite divergent, and that's quite interesting. And the third thing of these companies is that one of the pioneers of pay-as-you-go is one of the first companies, far behind MCOBA, of course. But despite that, they're quite important. They're one of the first companies to roll out this financing system gradually through the rollout of equipment that's too expensive to be paid in cash by the users. So when you talk about rural electrification, you see real technology, you've got marketing intelligence, and financial intelligence and innovation. So all that is in the darkest Uganda. So I find that quite interesting. The next stage will be to find the funding of pay-as-you-go, and that's the next adventure. Thank you very much. Now, we saw there was this arbitration in favor of impact. When you choose investments, when you raise funds, a promise can be different. But in the end of the day, how can you have an arbitration in favor of impact? One thing which is quite important, we haven't talked about before, you hear about the word acumen that has to do with patient capital. So we started 10 days. So we had 13 partners, and we started with 13. We've had only 3 exits. I'm not sure we're going to have 5 more in the next few years. So the investment is really on the long term, because there's these social objectives. So you can't just have a financial approach. So when you go into a project, we always talk with the entrepreneur about how we're going to leave them. And as Jean-Michel Severino said, for the ones who are bearing the project, if we don't agree on how we're going to get it out, well, out of 32 projects, we've only had one person who went bankrupt over 10 years. And the reason of bankruptcy is that we were free, purely financial investments who only looked at the financial returns. And when we needed to negotiate, in 70% of our projects we funded, we've always had these points where we were going to go further. And we had to really well see where we could get more money. And with the other investors, we've always had success because it was social impact, and we all decided together, you couldn't give things down, we can let them down. So we can't, as investors, say, I'm an impact investor, and then say, when I leave, I'm only going to think in financial terms. So that forces us to make choices. And we had one very concrete choice to make on a company in Africa and Europe, where the company was developing at a high speed. It needed to grow, and everyone was agreed that we needed to support them. And the only way to support them, in all the choices that we made, the best choice wasn't at the price we wanted, and we even lost a bit of money. And there was this unanimous agreement of all investments. They all said we must do it with them. So I think that we must sometimes accept to make decisions. And it's an arbitration between financial and social aspects. It's not always easy to do. We don't have all the tools in hand. I'm not sure that the people who are going to come after us are going to go on as we've been working. So it really needs to be an arbitration made by impact investors, because otherwise, if you leave, you only do it for financial reasons. Okay.
Question à la salle.
Now is the time for Q&A. Perhaps you'd like to introduce yourself. One gentleman here. Yeah, it's been quite successful panel. Let me borrow a microphone from you for the audience. Starting with you, sir, could you please stand up and introduce yourself? Rothschild Rothschild Foundation. Perhaps I would be less enthusiastic about the fundraising first. As you know, some foundations are interested in impact investing or impact investment, which is a problem in a way, since they, just like us, have to preserve the profitability of existing impact investment. And so it's quite a slow motion trend. But I see that foundations such as ours are interested indeed in investing. My reproach, the thing that could criticize to this world I belong to, is that we first want to invest a lot of money in impact measurement. The previous panel from the US was really insisting on these questions. Sometimes I think spending your time just trying to come up with the right formula for the best possible impact is a waste of time. It is a waste of time, and that's my second argument. Since I talk with African entrepreneurs in Kinshasa, Ouagadougou, Dakar, wherever, quite often all this impact sales speech is like a luxury from northern countries. See how they can do good, but in many African countries, the impact is about jobs, about women, is about financial transactions from that was talked about. So it's more. My question is more a comment, in fact, but the comment I believe will trigger reactions from our panelists. One more question. And one on the front as well. Thank you. Mr. Namata Amadou, Administrator of Sahel-Saharian Bank for Investment and there is a reflection to carry out about the link, the correlation between the financial impact of investment and social impact. Because this has been, of course, mentioned by everyone. And I'm going back to this because projects in current investments must target, mainly or partly, the job of young people. If people are left behind, that will generate other problems. I come from a country which is suffering from Boko Haram. They are, in fact, people, local kids who are promised, who are out of school or unemployed. Meanwhile, there are industries that are located in their regions, the oil industry, etc., etc. But they're left behind. They're attracted by these Boko Haram, giving them €500 wages or any kind of reward. And that's a phenomenon that is now in the interests of the overall of the world. And these are young local people, not military or whatever. So that was my first question. The impact, social impact of young people's employment. This morning, we've also talked about the protection of the environment. We have other questions. It is very important, of course, but quite often we must find solutions. When you tell a local population, you have to be aware of this protected species of animal or plant, it's quite difficult because they're living on this. So we have to come up with a compensation system. We talk about the bats, right? And somebody said, what about these bats? They're protected species, what to do? We've given an answer, but if we tell people don't toll these plants or these animals where they live on them, what can the solution be? I have a vast series of questions, but I will further develop that during lunchtime. Thank you, sir. Sir, one last question. Well, don't you think that the impact is a luxury coming from the north? And what about employment? We've talked about employment during this panel and beforehand as well. Martin Perrier, Edmond Rothschild Private Equity. My question is specifically to Christophe, Poline, Olivier De Guerre. We see the emergence of corporate companies focusing on impact investment with their own equity, and you're one example of this. Danone, amongst other things, or Mars and Nespresso. My question is, it's just one more layer in the potential conflicts of interest in terms of impact investment between the return on investment and the actual impact considerations. And with corporate funds, there is one more layer in terms of conflicts of interest between the different investors and the corporate level, which itself is positioned either because the company is trying to come up with an innovation fund or to promote a communication approach on this particular action. So I would like you to share with us your reflection and arbitrations you came up with in the partnership you made for these potential conflicts of interest management for Schneider Electric on the one hand and on the other hand investors. Thank you, sir. I think we will start with the answers and see if we have some more time for more questions.
Oui, si vous voulez, mais c'est surtout la dernière question qui est spécifiquement orientée sur.
Well, it is a question for Schneider Electric, the last one. Yeah, we'll answer the last one. First, the conflict of interest is more complex than this. When we consider SMEs in Africa, they're very happy to come and see us specifically versus other funds because we are Schneider Electric and we can give them things other investors, financial investors, can't. When we invest in a company, usually there is support with the Schneider Electric people who have technical or other kind of skills, who have a knowledge of the business of the corporate world that you cannot necessarily find with purely financial investment funds. There's a second thing. There must be return for all, but that does not necessarily mean a conflict of interest. I do not see why Schneider Electric could make a profit in terms of brand image or improve the quality of relationship with its employees because of investment in an SME in Africa, I don't know what that should generate a conflict with the development of the company. So there are operations where all stakeholders can profit from this, and there's no conflict here. Then, life is complex, you know, life is hard. And it is about the quality, it is based on the quality of the relationship, really. So we set up schemes and mechanisms, and we set exits for ourselves if our brand image is damaged, which would be a problem if a journalist turned to us saying, well, the company Schneider invested in is employing kids. And the investor is also protected, of course, using NDA systems, whatever. But if we want to move on at some point, we have to accept that life is complex. 10 years ago, when we started, the word of social economy, social investments, etc., associations, didn't want to hear about finance or financial and companies, that they were the devil, really. The situation is now totally different. There is a continuum between associations and companies. Everybody needs one another. That is understood. So these social companies must be able to work with bigger companies and therefore get expertise, grow, and gain skills, professional skills. As we worked with Schneider Electric, we would receive so many projects about electricity access. We didn't have the resources, technical resources to do it, so we turned to Schneider because they have the right skills. Pierre CARPENTIER may bounce back on this, but we're working in Danone, in the milk factory Senegal. She have a milk factory, and it is for the local production of milk in Senegal. And Danone came to us. It was not IMP. Danone was part of the committee, and they came to us via IMP. And Danone said, well, we're a big company, vertical organization. We thought it's important for us to better know Africa and grow there, to deal this little company with you. We need you to handle it. And Danone is not part of Laiterie du Berger. It's part of the capital of Laiterie du Berger. So that's a continuum, really, and that is necessary. Without this, we cannot develop these companies. And lastly, 4 years ago, at the Salon des Entrepreneurs, all the entrepreneurs, social entrepreneurs, were screaming, saying it is scandal what you're doing with Ribot. And the answer was, wait, for Mr. Ribot it's marketing, so it is for me, because if we don't work with him all the time, big companies will not come to me. Please let us work together. There are conflicts of interest, right? Let us try to handle them, being as open-minded as possible, and solve the social violence problems.
Surtout, on a pratiquement fini, surtout réduire les risques de conflit d'intérêts ou leurs effets. Une ou deux dernières questions, et une dernière question ici, et moi j'en poserai une au passage. Vous pouvez répondre tout à la fin. Ces entreprises que vous financez, comment deviennent-elles demain?
How can they become tomorrow economic champions on the African continent? Prince Janda, I'm founder of Tamberma company, working in Africa and Europe. But I don't want to talk about my company's business, but my experience. For 10 years, I've been working in Africa and in Europe, and in 10 years, I work in the field of IT and building industry. I wanted to know what happens when we work either with startups in Africa or companies that were informal quite a long time and intend to become formal, and therefore they need support. So you work in this field and you know very well how a bank is reacting in Africa. But as investment fund, and I heard Mr. Carpentier talking about Startup, I'm happy about it. How does it happen concretely when a startup wishes to work with an investment fund? And last question, and then time for answers.
Thank you. Vivina Berla, Saron Asset Management. I see that it's a wonderful panel combining fund managers, private equity funds, and corporates. And one of the questions that we actually did not address on our panel is the reality of value add by the private equity fund to the companies. And I was wondering if you could please just give us a guesstimate. When you invest in a company, how much do you think is the quality of the management team of the company that actually makes it succeed, and how much is it the value that is added to the company, whether you're a corporate or a private equity fund?
Qui est-ce qui veut répondre à cette question? Barthout, Maria Teresa, Barthout?
Ça dépend.
It depends. Well, also for the informal part, we work with a coffee firm in Congo, so it's a very small structure. And we would try to formalize things, but it's time-consuming, and it's not always efficient. So it's a fight somehow. We make it in the end, but it's time-consuming. So it really depends on the size of the company, and what is the reason of the promoter? What is the reason for cooperation? Is this direct funding with a debt and revenue sharing? But that's it, not more than that. It can be also for a project that has already been designed, and they're looking for money, mainly. And if I refer to the clinic in Kinshasa, there are many things. There are 3 physicians, they are their own clinic, but they want another one to be built up because the need it is required by the market. There's a need for more medical services. They do not know how to do it, though. So what we've learned is that project management is even more time-consuming. You have to be totally committed and let the physicians do their job. So it's about project management. We've restructured the debt burden twice, and so the project is time-consuming, even though we're here to support. And of course, we have technical assistance for the training of nurses and other people. So we made efforts that we cannot be done if we're only the promoter of the clinic. Thank you. I will try to answer rapidly on the questions about the startups. It is something that I've mentioned because we're deeply attached to the capacity of working with them. INP funded many startups, historically speaking. But we tend to say no rather than yes, unfortunately. For startup projects, there are many of them, but the good quality of project is, of course, the partnership. And then we can overcome regulatory constraints or complex situation of informal companies. So together we worked with the entrepreneurs to fully implement the investment project when we were motivated. But the added value now, just would like to say that of course it's difficult for us to provide an answer. The entrepreneur could better answer it. we do not have such a case in our portfolio. But I would like to say that except for the support, which is fine most of the time, we do the job most of the time. We do our job. But the relationship evolves, and there is a maturity with entrepreneurs in our talks, in the talks they have with investors, which is of higher quality. People know what they want, know what they can get, and they know why they're turning to us. And sometimes they have a choice as well, so that's good. But we try to take this further, saying, well, another element that can be given is to have a community of entrepreneurs that will be loyal. And therefore, we explain them that they can be used, or they can work as a network. So ANP network with an annual meeting point in Paris and soon in Africa. That is a chance to talk with them on our relationship and on their expectations about the investors, from the investors. So it's an avenue for potential improvements. Conclusive remarks? I'm interested in Vivina's questions in the conflict of interests. From a fund manager, if I consider what happened in the past, 4 to 5 years ago, we wanted to have companies committed to impact investment. From time to time, the funds of companies would come to us, but we were not happy because we knew that it was something nice to have, but small and limited. Today, we work more and more with the corporate world on topical funds, and therefore they greatly contributed because they're experts. Schneider Electric, in the field of electricity, or insurance, whatever. But at last, we got what we've been dreaming of for many years. But I agree, it doesn't mean that it's easy, because conflicts of interest immediately show strongly and need to be managed. And so that is a great opportunity to seize, so I think, and that is linked to big challenges, of course. We do not have all the answers, but it's quite exclusive. If you're working in the field of insurance, you cannot have a climate insurance fund with 3 reinsurers, otherwise they will fight. But I think it is indeed a problem to consider, because there is a mainstream commitment. It's not a little fund or which is not truly mainstream. If I may.
We are talking about complexity, and I think that's human experience. And these conflicts of interest are not specific to Africa or impact investment. Some of us have been working in this field in corporate funds for about 20 years, and we've got corporate funds and the rest of private equity mainstream. Just one conclusive remark. Oliver, Christopher, Oliver. How can we accelerate and be the champions of the future? To create the champions of the future, we need a lot more impact investment funds in Africa to work with all these entrepreneurs who need more capitals to help them develop. Now, if there are more actors, mechanically, this will develop gradually, and we'll see more and more funds grow. That's exactly what happened in the US and Europe. The first funds date back to 1987. The more actors there are, the more investors there are, the more chances there'll be of having these, of creating these champions, and we'll have a chance, a luck, of getting companies interested in it. And I completely agree with what Olivier said, but if there are many impact funds, the legal, political, and infrastructures must be there, because an investment fund can only do so much. Thank you, madam. Thank you, gentlemen. Thank you to the public.